TSMC just printed a record July, sales up 44.7%, and blew a hole in the peak AI trade. Plus 4 more stories moving the tape today. Let's get into it. The peak AI crowd spent 2 weeks calling the top. TSMC's July revenue answered with a record. The world's largest contract chipmaker posted 4 billion new Taiwan dollars, up 44.7% year-over-year and 5.6% from June, with January through July revenue of 2.87 trillion, roughly $98 billion, up 37%. TSMC bills NVIDIA, Apple, AMD, and Broadcom before any of them recognize $1 of revenue, which makes this the cleanest leading indicator on AI demand available. The run rate is now ahead of TSMC's own 2026 guidance of slightly above 40% growth. There is no demand crack in the foundry data. The bear case. This is a shipment number, not a profit number, and those wafer starts are funded by hyperscaler capex that the credit market is starting to resist. Next read is the August print in early September. Another 40-plus month, and the peak AI thesis loses its last data leg. The tape set a record, and the debt behind it got harder to sell. The S&P 500 closed Friday at 7,764, up 0.62%, capping a 3.6% week, its strongest since April. The Nasdaq gained 5.2%. The semiconductor ETSMC'S ripped more than 7%. And NVIDIA closed at 23.96, up 2.27%. That matters because the split tape healed. For 2 weeks, memory costs punished suppliers, while monetizers rallied. Friday stopped discriminating, and everything rose together, which is the signature of short covering rather than a change in thesis. The bear case sits into credit. JP Morgan raised its 2026 tech bond forecast to $30 billion from $40 billion, while hyperscaler cover ratios fell from nearly 5 times in February to under 2 times in July. Amazon paid 18 to 21 extra basis points on a $25 billion sale. The trigger is August 26th. If NVIDIA's data center guide clears, this rebound gets confirmed. If it misses, re-risked positioning unwinds fast. More Threads is capitalizing the hole NVIDIA was forced to leave in China. The Beijing GPU designer, founded by former NVIDIA China executive Zhang Jianzhong, says it will list in Hong Kong after first-half revenue jumped 147% to 1.74 billion yuan, with the net loss collapsing to 11.6 million yuan from 270.9 million a year earlier. Shares are up more than 420% since the Shanghai debut. This is a company approaching break-even, not a subsidy case, and it now competes with Cambricon and Huawei to absorb the market NVIDIA was forced to exit. Hong Kong IPOs have raised more than $42 billion this year, already a 6-year high, as US and EU barriers push Chinese tech offshore. The bear case, 1.74 billion yuan, is roughly $2 million, under 1% of NVIDIA's quarterly data center revenue, and a 420% run prices a decade of share gains into it. Watch the Hong Kong prospectus for gross margin. Above 30% signals real architectural competitiveness. Below 20%, and this is volume bought with price. OpenAI just stopped OpenAI. The company said it cannot rule out that its unreleased Astra model reaches the critical cybersecurity threshold in its own Preparedness Framework, defined as finding and weaponizing zero-day exploits across hardened real-world systems without human intervention. It paused non-compliant internal work, moved Astra to isolated testing with restricted access, and voluntarily briefed the administration on the delay. This is the first time a frontier lab has publicly slowed a flagship release on capability grounds. Until now, a safety threshold binding a revenue-critical launch date was theoretical in every AI valuation model. It lands on top of the Hugging Face agent breach that former NSA cyber chief Rob Joyce called the most consequential hack since the 1988 Morris worm. The bear case cuts both ways. Either frontier timelines are now subject to safety schedules nobody underwrites, or this is positioning against the AI Kill Switch Act. Signal: if Astra slips past the fourth quarter with no release date, competitors' shipping cadence becomes the differentiator. Google's most important engineer walked out, took 3 of its best researchers with him, and Google wrote him a check. Jeff Dean is leaving after 27 years to found Discovery Loop, a public benefit corporation building AI that proposes, runs, and analyzes thousands of experiments in parallel. He takes Sanjay Ghemawat, Oriol Vinyals, and Kwok Lay with him. Sundar Pichai confirmed Alphabet will be a founding investor and cloud partner. And that is the tell. Google chose to buy an option on the spin-out rather than fight the departure, the same playbook it has now run repeatedly. It lands in the same week the DeepMind reorg moved Dimas Hassabis to chairman. The bear case for Alphabet. This is real research capacity leaving, not a symbolic exit. And it converts an in-house advantage into an equity stake. Watch Gemini's next release cadence. A slip into 2027 says the bench was thinner than Alphabet's option buying suggests. One through line today: the demand is real and the risk has moved. TSMC proves the wafers are shipping. The bond market and OpenAI's own safety brake are where this cycle now gets tested. And August 26th settles the argument. Subscribe for the Daily Alpha every weekday before the open.